Good afternoon, everybody. It is August 15th, and the stock market has had a little bit of wiggle today. I think it's wiggled to the upside as of a couple minutes ago. And I just want to talk about some things that have been in other analysts' notes and show you a couple of screens and charts. There is really nothing that I want to sell cash secured puts on or covered calls on at this moment. I've written about some of our things that we're invested in. People are asking, hey, it ran up this much this quick. Should I sell a covered call? And the answer on covered calls is usually no. The exception is when something is both overvalued and overbought, not one or the other. Why? Because we want to ride our winners. And stocks of ours are typically not overvalued until there's a massive run-up. And 10 or 20% is not a massive run-up. A massive run-up is, maybe 100% or 150%. It's very rare that we're buying anything that's even fair valued most of the time. Usually it's undervalued. Some of the ETFs are closer to fairly valued, and we can maybe write some covered calls on partial positions if they're large positions. But with the stocks, we really never want to write covered calls, especially against a hold position, unless we really feel like we're starting to bump up against the valuation for this company is 3, 4, 5 years ahead of itself. In those cases, yes. But the things that we've been buying for the past year, there's nothing that's overvalued that's in our universe. So no, we don't really want to write covered calls. Now, do we want to write any cash secured puts? Well, because of this rally, there's almost nothing that's undervalued. These are some of the ETFs, and you see how few are below 30 and how few are even in the 30s. Really have a lot of 40s, 50s, 60s, and higher. So we're at this weird spot where there's very little to do on the cash secured put or covered call area. If we switch over to stocks, we take a look and you say, well, we've talked about writing puts on Warner Brothers Discovery over the last month and on Intel. But if we take a look, there's almost nothing that's oversold, right? So Warner Brothers Discovery, Intel is close, and I think that Intel is fairly valued. I think that Warner Brothers is undervalued. So Warner Brothers Discovery is the one that I'd be focusing on for most folks. I've put out trades for you to take a look at the last couple of weeks, and then we quickly get away from oversold very quickly. And if we rate this for overbought, there's almost nothing that's overbought. We weren't in H&R Block or McKesson in the first place. There's a handful of people who are in Sierra Wireless from a couple of years ago. And I tell you right now, I think Sierra Wireless is overvalued. So Sierra Wireless, I'd really be trimming back and selling covered calls. First Solar, there's a handful of you that probably own that, and Enphase and Travel Centers of America. I don't think these are overvalued. They're probably fairly valued. So if you wanted to sell some covered calls on part of a First Solar or Enphase or Travel Centers of America or Vici, maybe even New Fortress Energy, but I really think this one's going to 100. You could write covered calls on partial positions here, because on the weekly screener, I'm still having that problem with my column settings here. I've contacted TradingView twice and they haven't fixed it. There's just very little to do here. SunPower, I think that one's going to 100. Why would I write a covered call at, 28 or 27 or whatever it is today? And you just go right down the list. There's almost nothing that we've bought that is overvalued and overbought. So there's just not much to do this week. So where are we? Well, this is Shooter's chart, and he's basically saying that we're right on top of a rejection for the S&P for SPY, and that it could head all the way down here to 350-ish, 360, 350. So off of here and then back down. My chart's basically saying the same thing, and I have two different scenarios here. I think we get a correction. This is a pretty solid support zone. You see where it jitterbugged in here. That's a good support line, and it could double bottom and then rebound and then set a new bottom, or maybe it's the start of a 5-wave up. So whether we start the 5-wave up from here or here, I think by early 2025, we're in the same spot. So that means that on this next correction, you need to be a pretty heavy buyer and put seller, because we don't know if it's going to go down in here. I think that this line right here will be approached, and because we don't know what the Fed is going to do, and we don't know what's coming from Saudi Arabia, China, and Russia, although China is stimulating all of a sudden the last few months, and Saudi Arabia seems to be playing nicer, and Russia's wearing out. So I don't know if there's going to be another negative shock. I don't think anybody does. I don't think anybody knows if oil is going to shoot back over 100. I think for a hot minute it will. But I think that this price range near closing in on 80, which is what I've always talked about, 80 is roughly your equilibrium price in oil markets. Anything above is too high and will come down. Anything below is too low and will come back up. 80 is about the right price for a barrel of oil, regardless of how much we produce. Because if we produce a lot and the price of oil goes down to, say, 40 something, it just means that our company's getting financial trouble again. The price of oil is going to be 80-ish, when it's in equilibrium, 75, 85, something like that. And when it's higher, you'll get more production and it'll come down a year later. And then when it's lower, you'll get less production and it'll go up a year later, just the way it works. So I think that we are closing in on equilibrium for oil. I think we are likely to see all of these clean energy things resolve a lot faster than you believe. The Federal Energy Regulatory Commission already has stated that if all the projects that were proposed were built in the next 5 to 10 years, we'd be able to get 80% of our electricity from solar and other renewable sources. But solar is outpacing wind at this point about 3-1 now. And I think it'll end up being 4, 5, 6-1. Told you about the project that I'm looking at, and I'm going to meet with some developers next Tuesday, I believe it is. And I'm going to try to get this project to be the first of a series of projects in the same area. And they'd all have their own microgrids. And we wouldn't even hook up natural gas. Rather than hooking up natural gas to the subdivisions and running all that pipe, we would just say we're going to save that money and we're going to put that into deploying our own microgrid. So between the regular grid and our local grid, that'd be all the energy we need. Everybody's going to have to learn to cook on an electric stove. If you want to cook on gas, you go get a tank and you set up a grill in your backyard. And that's the future. That's what's coming all over America. Microgrids, they're being heavily incentivized, right? The bill just got passed. They're calling it the Inflation Reduction Act. And really, they're calling it that because by adding energy into the system over the next several years, that makes us energy self-sufficient again. We don't have to rely on OPEC. And probably as EVs come on and countries with oil are like, holy cow, we better use this instead of getting it stranded in the ground, we'll get that panic pumping. So I'm not at all bearish on the next several years. At some point, we have to deal with the baby boomer bust. That's probably towards the end of the decade, 27, 28, 29, right in there. So with regard to development projects, yeah, you might expand a microgrid. Somebody asked, would we connect the microgrids? Yeah, if you're in the same homeowners association, for sure. You make a bigger microgrid so that the energy can flow to where it needs to flow to. And we'll be looking for investors maybe by this winter. It'll be for accredited investors only. That's who I'm talking to. So you have to be, a six-figure earner or a millionaire already. And we'll probably be looking for investments. I don't know of how much. I'm going to let these guys are the professionals on how to do this. They're the limited partner professionals. But I will say, somebody was asking me about REITs the other day. In fact, it was yesterday. An investor who listens to the show from time to time asked me about REITs. And I said, look, REITs take such a big haircut that they're very rarely great investments. And what do we know? We know that in the last 20 years, the only REITs that have outperformed the S&P 500 index as groups, right? There's 11 industry groups for REITs, something like that. But the only industry groups for REITs that have outperformed the S&P 500 have been the industrial REITs, and storage REITs have also outperformed because we had a shortage of homes. They had storage space. That's going away. So I'm not so sure storage REITs outperform in the future. I think industrial REITs outperform for a really long time as supply chains move to America from elsewhere over the next decade or so. So when we take a look at the S&P 500 again, I don't know exactly, does the correction start here or end here? Is this your double bottom, or do we set a new bottom? Hard to know. Could go straight to there, might not even bounce. But I don't know that it matters too much. I think you have to start buying in the middle 300s on SPY again, like we did a few months ago, because I think that this presidential rally, which is going to happen because it always happens, because of the new spending from this bill, even though it's a balanced bill, and because at some point the Fed is going to pause. And whether they pause in September or December or February, I don't know. It'll be in that time frame. I think one of the things that could happen, if the Fed is going to try to be supportive of the president and the party in power, I think they will raise interest rates 0.5 point and then simultaneously indicate this might be it. Now, September 1st, we get the balance sheet runoff increasing, right? It'll double up to 95 billion a month. And I think that that's going to be pretty problematic for the market for a while. So I still think we get a correction. I just don't know if it stops, in the 360s, 350s, or it gets all the way down to my target of, 320 something. We'll see. But if you're selling puts in here, and we'll have those orders as this comes down, you get a whole bunch of orders. So between now and September, maybe just let a lot of puts expire, let your dividends come in, and just slowly ebb and flow, raise a little bit of cash, especially if your asset allocation is out of whack, right? If you only want to own 2 to 3% of something and you own 5 because you had a couple puts put to you, those would be some of the places where you can adjust your asset allocation just to bring you back to your targets. My asset allocation is about 81, 82% in equities right now, but I do have some puts that will expire. That should get me back to about 70, 71, 72% equity allocation with pushing 30% cash by the third week of September. So you can take a look at the very short list and you see that I've been starting to really get it nice and updated. I'm still trying to work backwards to the start of the year, but I've got the current stuff up there. We have the trackers for what I've been buying, where I sell it, where I trim it, when I'm selling some puts, and on rare occasions, some covered calls. It's just that, like I said, what we own for the most part is not overvalued. Now, there are overvalued stocks out there, but again, not in our universe. So if you have questions about something you own, I will throw up a very short retirement income options piece this afternoon, but it's basically going to say there's not much to do. This is a hurry up and wait situation. So you've got a couple weeks of summer left. Go out and enjoy it. QQQ, I think, is pretty similar to SPY. Shooter says the same thing. All right, we're hitting a spot where we might want to, if you're a trader, he does his charts for traders. So if he's saying you might want to short it at 358 on QQQ, if you're thinking about getting in, that's just a good indicator not to yet, because this should run back down to about 328. If it goes through the 328, then it's going to go quite a bit lower. I could see QQQ getting into the middle to upper 200s. Doesn't mean it has to, right? There's a line right here that was the previous bottom. An alternative would be that it only gets to about there. Then it starts to go back up again. But this is my prediction. Doesn't have to get that low, but it could. And if there is a shock, if there's something out of Russia or China or Saudi Arabia decides to stop playing nice, then maybe we do get bottom fishing prices. But as I've said for 6, 7, 8 months now, I've always expected the Fed to pause this fall. We'll see if I'm right. Hard to know. If they keep getting tighter, then I think they probably run the risk of slowing the economy without changing inflation much, because inflation's so dependent on energy. So we'll see. And obviously, the Saudis are going to maximize their profits. So there's going to be this back and forth game that gets played. All we can do, especially the stock buyers, is focus on the individual names and use any correlation on the downside to be buyers. And then we have some winners for the next few years whenever this presidential rally starts. TLT, it's been a tough one. Shooter thinks that maybe it's about to head back down if the Fed is tough, or at least for a number of weeks if people think the Fed is going to be tough. You've got a couple hawks out there saying, hey, we need to just keep being tighter. And I think that is them trying to restrain the market. But remember, the roll-off on the balance sheet goes up September 1. So that's going to take some liquidity out of the market. So he's thinking it's going to jitterbug along here, and we'll see. In which case, he thinks he gets all the way down to around 100. Well, take a look at TLT, what I've said. And look at that. We're pretty close here. I'm seeing 105-ish, 106-ish. And then if rates go lower, it's because for one reason or another, right or wrong, the Fed's decided to be tighter. I don't think that they should. That doesn't mean that they won't, right? they don't call me. Hi, Kirk. This is Jay Powell. Like to know what you think I should do with interest rates? Well, Jay Powell, here's what I think. I think that they need to make sure that there's enough liquidity for supply chains to move. Companies need that. Now, one thing that Ned Davis pointed out, which is going to sound like a rerun because I told you this months and months ago, was that early in these cycles and these rebounds, the small caps do better. And you've seen that in the last several weeks, the small caps have started to outperform the large caps. We talked about that last week in a webinar. The small caps and the mid caps are going to outperform for a while. Why? Well, it's because the strong dollar is better for them than it is for the international conglomerates. Your S&P 500 companies suffer a bit on the repatriation of overseas funds. Well, small and mid caps are more domestic in nature, right? They do more business in the United States than they do overseas. So they don't have the headwinds from the currency being strong. So we'll see what the dollar does. We can take a look at that really quick. It hit my target. I told you that might be the peak. It's come down a bit. Doesn't mean that it won't go up. If we switch to the daily chart, there you go. It peaked, I think it might have been the same day. Was that July 14th? Was that a webinar day? Let's take a look at my trusty calendar. Let's see here. That was a webinar day. We may have gotten the peak on the dollar to the day. I'll go back and I'll check. Now, I think it probably makes another run up here in the next few weeks. That's would be bad for the market. That'll coincide with the draining of more liquidity from the Fed balance sheet. And if it breaks out up here, you probably see a pretty significant correction. But wherever it tops, as it comes down, that starts to get better and better for large caps. So by then we should be in large caps as well, and we'll have our small cap growth stocks. We'll have our mid caps, both growth and value. Hopefully some of our REITs we get to buy again, and then our large caps, which are the what did we decide to call it? Did we decide to call it the man bag stocks? Yeah, the man bag stocks. Tell you what, I'm dying to buy Amazon. I really regret having missed Amazon. So that is something that we're going to try to get into. Amazon is going to disrupt at least another half a dozen industries and probably a dozen. And I do think AWS gets spun off. I think that day is definitely coming. I think Amazon Marketplace is going to be a thing, and the actual technology stack is going to be its own company. The day is coming. It doesn't make sense for it not to happen. The only question is when do they decide that they can maximize their executive bonuses by doing it, right? Because it's not really about the shareholders. So the dollar is close to a top. I don't know if it sets a new top or just double tops. My guess is it goes through a little higher, 110-ish, 111-ish. I think that's what Shooter is saying. I'll double check. I mean, you could see, in fact, I think I remember Shooter saying that it could get all the way up to 120. That would be a heck of a spike. For that to happen, there'd have to be some sort of response to something that happened overseas. It would be my thought. Because I think they know they're in a pretty precarious zone right now. They really don't want the dollar to get too much stronger. But if it can bounce around in here for a long time, that'd be very good for American standard of living. So we'll see. All right. I really don't see any questions up. So why don't we call it a day? Go out and enjoy your summer. Let your dividends trickle in. Let your puts expire. Accumulate a little bit of cash into September, but not a ton, because maybe they pivot by that September meeting. Maybe the Fed says, "Hey, we're raising a half a point, and we think this might be enough." It would not shock me in the least for Powell to say that. And in fact, I would say it is 70% likely, 2 out of 3 likely, right? Meatloaf. Let's meatloaf for this one. 2 out of 3 that Powell says, "I'm raising a half a point, but this might be it." That's my prediction. So that means you want to have some cash going into that meeting, but we'll probably be selling puts right before that meeting. For right now, we are, like I said, hurry up and wait. Any of you who've been in the military, you understand hurry up and wait. I think that's where we're at right now. So enjoy the weather. Have a good day, folks.